Guys, it's Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that help me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today, guys, I want to talk about the shifting market. So we have, in the time of this recording, it's February 2023, and we are coming out of, a crazy 2022 and into 2022, middle of the year, the Fed started hiking interest rates at 75 basis points a pop. It dramatically halted the mortgage industry and the amount of people able to buy homes, making your monthly payments go up. So, no more listing at 600,000, and when you can buy it and borrow at 2 or 3%, it doesn't matter if you're paying 620 or 640. But when you're paying a 5, 6, 7% interest rate, that starts to add up pretty quickly. So it softened prices. Now, Cameron, what the hell does that have to do with my rental property? I'm not watching this because I need a lesson in the national market. I'm glad you asked. What has happened, and this is what I've told all our owners, and I want to put this out for everybody, is the market is shifting, as you're well aware. So we've brought on several owners over the past few months that were flippers. So people who were, trying to sell a property at $350,000, they did the whole rehab, or $400,000. They dropped the price. Okay, I got to stop the bleeding. I can't sell it for what I want to. I'm going to list the property for lease. They come out, reach out to us. We list the property. We manage it for them. So they're just waiting on prices to come back up. Once prices come up, they're going to end up selling it, hopefully for a profit. So that is a big change. Now, you might not think that involves many folks, but that amount, those people that have bought those that thought they were going to sell at 350 or 450 or 500, and the prices started to soften, it might take a while to get the prices back up. So those amount of folks who are doing that are going to be flooding the market here for a little while until prices start to rise. A rising tide lifts all ships. So as soon as those interest rates come back down, or the market, at least interest rates get stabilized, and then we can increase, we see the rise up in prices again, asset prices, that's when you'll start seeing those flippers come out of the long-term rental game and back into selling those houses. So that's one category of folks that's coming through. Another category of folks, I don't know if you guys can hear Lola scratching at the door. Another category of folks that's coming through are Airbnb owners. So during the craze, COVID, people being out of the office or being able to work wherever they want, there were quite a few people that invested in Airbnbs. Now, I've got a video up here on Airbnbs, why I don't like them. Long-term, as a wealth building strategy, I do not like Airbnbs. I think it's a different business. So you can watch that, see all the details on that. So these folks bought Airbnbs and thought they were going to rent it at $300, $400, $500, $600 a night. Biden has pretty much said it's almost damn near over here in the next couple months. Once that's over with and people are going back in the office, they have seen the job listings for remote working trending down and continue to trend down. It's still above levels of what we've seen before, but being able to go for a month in, Destin, Florida, or the Smokies and work remotely in an Airbnb, those are coming to an end. I'm not saying all jobs are obviously going to go back in the office, but we have to be realistic. Several big companies, Disney, Facebook, Apple, some of these massive companies with thousands and tens of thousands of employees have come back and said they're bringing people back in the office, at least for a few days a week. So instead of being 100% remote, working wherever you want in the world or country, you have to come into the office a few days a week. So that is going to significantly eliminate some of these long-term Airbnb stays. The other kicker is Airbnb occupancy has gone. Now, I don't remember where I saw the exact stat. I could probably pull it if somebody calls me out on it. But the occupancy has dipped to a low they haven't seen in several years. So occupancy for Airbnbs is going down. We are seeing people turn Airbnbs or properties that were Airbnbs into long-term rentals. We've got a couple clients I'm speaking with right now who, hey, Airbnb isn't working out. What am I going to do? I want to see what I can get long-term for it. Well, hey, let's get this property unfurnished. Here's what your long-term rent rate is, which is significantly less than the nightly rate you were going to get at an Airbnb. So we're seeing people come to the market like that as well. Houston, it might not happen as much, but because we have a lot of hotels here, so it's not as Airbnb friendly. But if you get down to Galveston, and maybe some of these other like Lake Conroe and whatnot, I think you're going to see some of that happen again. So just be cognizant of that. Having said that, those are the main two culprits that we're going to see come into the market. The third one, those are the main two. The third one is the people who locked in a mortgage over the past basically 5 to 7 years. So they've got a 2, 3, 4% mortgage. They bought it at a really good deal, or obviously have seen a lot of appreciation, but they don't want to sell it because, man, I've got this 3% mortgage. This property's in a great area. Everything around it's gone up so much. I don't want to, I wouldn't want to buy again in this area. Maybe I can't afford to buy again in this area because everything's gone up 100 or 200 grand. So I'm just going to hold on to it. I'm going to move maybe for a job. I'm relocating. I might be moving for, just upsizing, downsizing, whatever it is, but I want to hold on to that property. That is coming as well. So we're seeing a lot of people, especially now that they can get a lower price on some of the properties they might have wanted to buy 2 or 3 years ago, and they just kept getting outbid. You're going to see people buy those homes, buy a property as an owner occupant, rent out their current home they're living in now. We've had several owners that are doing that. So those three folks, the Airbnb, the flippers, and the owner occupants who have a low interest rate, you're going to see them start to flood the market with rental properties. Now, what does that mean, Cameron? Should I not buy long-term rentals? No. What I'm saying is, if you're going out and you're doing an assessment or what they call pro formas from realtors, and you're looking at a deal, I caution you to be conservative in your numbers. Please take a minute. If they're telling you it's going to rent at $2,000 a month, you might want to try $1,950. If your numbers don't work at $1,950, it's that close at $2,000, I wouldn't do it. Just be very careful because we're going to see a lot of inventory come to market. We're going to see a lot of supply for rental properties. They're already seeing new listings coming way down. Why is that? Because people don't want to sell their property. They don't want to lose that 2 or 3% mortgage rate. They don't want to sell when the prices are compressed. They're going to keep that. They're going to keep the home. They're going to rent it. They're going to try to Airbnb it, which some people do and don't like, or they're going to try to rent it long term. Be conservative in your numbers going forward, and make sure you're thinking about renewals with tenants. So if you have a tenant and you start seeing prices around you come down, and the tenant, you go to renew and the tenant says, hey, I'm not interested. Make sure you find out, is it because the rent is too high? It has stuff compressed around you so much that they can go find a better deal somewhere else. That is something that we might see here in the springtime. There might be so many options that for tenants that we're going to have to start competing a lot when we have a vacancy to get a tenant into our property. The last thing I'm going to say about this, I know I'm getting a little long in the tooth here, but be cognizant of functionally obsolescent properties. Cameron, that's a big word. Yeah, I just learned it about a month ago. So functional obsolescence means that it's a weird layout. It doesn't really make sense. It feels weird. Some of these deals that you couldn't get a year ago are coming to market now, and they're just sitting. And you're like, oh man, they just dropped that price 50 grand. I'm going to go buy it. I would not be buying properties in bad areas or properties that are functionally obsolescent by any stretch over the next year or more, maybe even longer. Let's see how long this all plays out. And the reason I say that is now is the time to pick up in fantastic assets. Properties downtown, properties in these great markets or great suburbs like Katy, areas of Spring, Cypress, Tomball, some of these great markets, or even closer to town in Spring Branch, in the Heights, in East Downtown, buying properties a little bit closer to town, Galleria. I mean, I can name umpteen different areas that you could buy properties in, but properties that are going to appreciate above and beyond the normal rate of appreciation, or what you can expect to. Because obviously they went up crazy. Now they're coming back down to normal levels so we can flatten out. I would not be buying outside of town, and way out in Baytown, down in Texas City, Lamarck. I wouldn't be buying in those markets. Dayton, I mean, I can name half a dozen markets. Sealy, anything way outside of town, I would not buy in. And the reason being, when there's so much supply and people have a lot of options, they're not going to go out there. They're going to pick a nicer property. They're going to pick a property that's closer to their work, that's fixed up a little bit nicer. They're not going to go all the way out, and they're not going to go to a functionally obsolescent property. Now, let's touch back on functional obsolescence real quick. Weird layouts, stuff, we were in a property, I'm not even kidding, it didn't really have a master or primary bathroom. It had a very strange layout where the bathroom was you had to go through a closet to get in the bathroom, and there was a desk in there. It was very, very strange. Why would somebody rent that when you can rent at the damn near the same price right down the street because there's another property available? Before, a year or two ago, you didn't have the options. There wasn't that much inventory. Now you're going to have the inventory. You're going to have the options. One other thing, the last piece I'm going to tell you, be careful of garage apartments. I've just spoken on this topic with several of our owners. That is also something, it's not quite functional obsolescence, but it's kind of strange to some people. Some people, hey, I'm going to live in the garage apartment and I'm going to rent out the main house. That is a fantastic strategy. But we are seeing now, again, with a lot of inventory, if I have a house I can rent and I get access to full property for a certain price, and about near the same price, I have to share. I don't get access to the garage. I don't get access. I've got to share this, weird space in the back. This guy or gal is going to be living back there, and we just have to walk by each other all the time. And who parks in the driveway, or is there parking? Who's handling the grass? If you have an option to rent a whole property by yourself, or a property with a garage apartment for the same price, you're always going to pick the one where you get more privacy. So be cognizant of that, guys. There's a lot of stuff. This market's changing very, very quickly. And I think as we get into the spring, these are kind of some of these timeless lessons. When prices come down, and there's a lot of inventory coming online, don't buy stuff way out in the boonies. Buy fantastic assets. Buy great properties, nice brick homes close to town that are in high demand and will be even in higher demand when everything comes back. The other last lesson I'm just going to repeat: make sure that you're being conservative in your figures right now. It's not going to kill you to knock a little bit off your rent estimations or your vacancy periods, extend those a little bit. It's not going to kill you. There are going to be more deals that come. Just be patient. Now is the time that we were talking about over all those years. Keep with your figures, keep with your analysis, and see what fits your buy box. Okay, I hope that was helpful. If it was, let me know. If it wasn't, let me know. And you guys, happy investing in 2023.